Welcome back to The Sensible Investor, the podcast where we try to make sense of the sometimes senseless world of finance. I'm your host, Kate. Today, we are going to do a deep dive on a single stock that, in many ways, defines the modern economy: advanced micro devices, better known as AMD. Mark, welcome back.
Thanks for having me, Kate. It's a fascinating company to cover. For a long time, the joke in the industry was AMD is the company that's always just 5 years away from being 5 years away. But that's a narrative they've completely rewritten.
They certainly have. Under the leadership of CEO Lisa Su, their stock has seen a meteoric rise, and they've challenged the giants of the industry. I remember when this stock was trading below $20 several years ago, and anyone who bought back then made tons of money. So, for investors looking at AMD today, let's start with the bull case. What is the fundamental argument for buying and holding this stock today for future gains?
The bull case rests on 3 powerful pillars, Kate. The first is their incredible execution in their core markets, PCs, and most importantly, data centers. Their Ryzen desktop CPUs and EPYC server CPUs, built on the new Zen 5 architecture, have been phenomenal. Their original goal was just to catch up to Intel, but now we can safely say that in many cases, especially in performance per watt and core density, they surpassed them. Cloud providers are obsessed with total cost of ownership, or TCO. This includes not only the cost of buying a chip, but also the cost of running it, including electricity and cooling overheated machinery. AMD's EPYC chips often allow them to pack more processing power into a smaller, more energy-efficient footprint, which is a massive advantage. We've seen them capture a significant slice of that lucrative data center market, climbing from nearly zero a decade ago to now holding a substantial market share, which some analysts put north of 25%.
So, Pillar 1 is stealing market share from their primary rival in established, profitable sectors. It was also helped by Intel's own failures, though. It almost looks like Intel and AMD switched places from a decade ago. What's the second pillar for AMD's growth story?
The second is their quiet dominance in the world of custom and graphics silicon. Everyone knows their Radeon GPUs are competitive in the PC gaming space, but their real genius has been in custom chips. Both Sony's PlayStation 5 and Microsoft's Xbox Series X and S are powered by custom AMD processors and graphics. This isn't just a one-time sale. It's a stable multi-year revenue stream that lasts for an entire console generation. They've extended this success to other high-profile areas, too. The powerful infotainment systems in every new Tesla are running on AMD chips, and their custom silicon power handheld gaming devices like the Steam Deck. They are becoming the go-to company for high-performance custom solutions.
That's a great point. It's a less volatile revenue stream than the consumer PC market. Once businesses order a custom chip, it's very difficult for them to switch vendors, which means long-term business. But let's talk about the elephant in the room, the area every investor is focused on right now: artificial intelligence. How does AMD fit into the AI picture?
This is the third and most explosive pillar of the bull case. For a while, it seemed like NVIDIA owned the entire AI universe, but the demand for AI accelerators is so immense that the market is desperate for a viable second source. AMD has stepped into that role with their MI300X accelerator. It's an incredibly powerful chip that competes directly with NVIDIA's offerings for training and running large language models. The argument here is that the AI market isn't a winner-take-all situation. It's going to be a multi-trillion-dollar industry, and if AMD can capture even 10 to 20% of that market, the potential for revenue growth is astronomical. They are positioning themselves as the powerful open-source alternative. Companies are wary of being locked into a single supplier, so AMD's open ROCm software platform is very attractive to businesses and researchers who want to avoid being beholden to NVIDIA's closed CUDA ecosystem.
Okay, so that's a very compelling bull case. Let's bring it back to earth. As any sensible investor knows, there are always 2 sides to the coin. What's the detailed bear case?
The bear case is that AMD is fighting a brutal 2-front war, and wars are expensive. On the CPU front, you have a wounded but resurgent Intel. They are pouring tens of billions into new foundries and have finally course-corrected their product roadmap with their Arrow Lake chips becoming much more competitive. On the AI front, they're fighting the undisputed king of the hill, NVIDIA. This requires a colossal R&D budget just to keep pace, let alone get ahead, which can put pressure on their profit margins.
So the competitive pressure is immense. What about the stock's valuation?
That's the other major concern. AMD's stock price has had an incredible run, and it trades at a high PE ratio of 95, significantly higher than the broader market. The market is pricing the stock for near-perfect execution in its fight against two of the biggest, most powerful tech companies in the world.
So are you saying the stock has no room for error at these levels?
Precisely. For an investor buying today, any misstep, a product delay, a weaker-than-expected quarter, a sign that their AI traction isn't growing as fast as hoped, could cause a major correction in the stock price. The current valuation assumes everything will continue to go right.
You mentioned NVIDIA's software earlier. Can you elaborate on why that's such a significant hurdle for AMD?
It's arguably the biggest one. NVIDIA's biggest advantage isn't just its hardware. It's its decade-plus lead with its CUDA software platform. It's the Windows of AI development. Millions of developers, researchers, and data scientists have built their careers on it. For AMD to compete, they need to convince this massive community to switch to their ROCm software platform. Trying to displace an entrenched software ecosystem is like trying to launch a new social media app to compete with Instagram today. It's an incredibly difficult uphill battle, even if your technology is excellent.
And you mentioned geopolitical risks. How does that specifically impact AMD?
Like most of the industry, AMD is fabless, meaning they design their chips but don't manufacture them. Their most advanced, high-margin chips are made by one company in one part of the world, Taiwan SMC. This creates a massive single point of failure. Even with initiatives like the CHIPS Act trying to bring manufacturing back to the U.S., the absolute cutting-edge process nodes that AMD needs are still primarily based in Taiwan. Any geopolitical disruption in that region could, in a worst-case scenario, bring their entire production of high-end chips to a halt.
One final question, Mark. If an investor has money for big tech, why AMD over, say, Microsoft or NVIDIA itself?
It comes down to your thesis on growth and competition. Microsoft is a more diversified enterprise software and cloud giant. NVIDIA is the established market leader in AI. Buying AMD is a specific bet that the number 2 player in a massive growing market can deliver superior returns by capturing share. You're betting on the challenger, not the king. It has a higher risk profile than a more diversified company like Microsoft, but potentially a longer runway for explosive growth than the already dominant NVIDIA.
A very thorough breakdown. So, to summarize, the investment case today is a high-stakes bet on a brilliant underdog, weighing its proven success in corn markets against a demanding valuation, a brutal two-front war with tech titans, and significant software and supply chain hurdles.
That's it exactly. An investment in AMD isn't for the faint of heart. It's for someone with a long time horizon, a high tolerance for volatility, and a strong belief that Lisa Su and her team can continue to execute flawlessly in one of the most competitive industries on Earth. It's no longer a simple turnaround story. It's a complex play for a prime seat of the future of computing.
A fantastic summary, Mark. It really shows how a company can be both incredibly successful and still present a complex picture for a sensible investor. Thanks so much for your detailed insights today.
It was my pleasure, Kate.